In this video, guys, we're going to talk about trade targets and maybe an alternative you could consider trying. Stay tuned. Hey guys, warm welcome to you. All right, so one other strategy that you can use rather than using price targets is to basically use a specific time of day that you reevaluate your trade. Now, this is probably more for swing traders, but don't rule it out if you're a day trader. So, an example could be, all right, let's say you've bought the SPY off this low, there's support, fine. And normally you might have some kind of price target, but the challenge we have as traders sometimes, or a lot of challenges that a lot of traders have this challenge, should I say, is that they struggle to hold for that final target. They struggle to hold the trade and let the trade kind of mature. And there's a double-edged sword here, because sometimes the price will go to the target, you take the trade off, you go, oh, well, actually still some more in it, maybe you want to get back in it, and you end up seeing the price go on and on. The other one, of course, is the price doesn't go to target and it's so close, and you feel like, it's so close, what should I do? And you kind of have this conflict. And the problem you have, or one of the problems with targets, is that you're anchoring the price action on your entry, your stop, and your target. So whichever one it's closest to tends to be where you consider the anchor for price. In other words, how you are looking at price. If price is just below your target, imagine your target. Yes, here's an example here on the SPY. Imagine your target was here, or let's say a little bit lower, and the price is sitting here. You're almost not even thinking about the fact that you got a great entry down here on this kind of retest of a higher low. You're thinking, oh, it's not quite at my target, it's almost there, it's almost there, it's almost there. And you're framing the whole trade around that. And that can be detrimental to your trade. So another way, and listen, there's nothing wrong with using targets at all, guys. I think, I'm just giving you an alternative that maybe you can try if you're struggling with your targets, you're struggling to run things, is to think of this. And this helps me out in certain situations as well. I kind of develop it for maybe my final trailer. If I'm holding a trade and a stock's just running on, I'm long on the stock. I want to try and get as much as I can from it. So one thing to do is to have fixed times that you will reevaluate the trade. So for example, let's say you took the trade here. You would say, okay, 1 hour later, I'm going to reevaluate the trade. So you have no target, you have a stop loss in, you have a kind of worst case scenario stop that you always have in. Always recommend having a stop in. Maybe you have that under that low, for example, in this trade. I'm just picking anything here. This happens to be the Qs. I think I said SPY earlier, it's the Qs. Doesn't really matter what it is, guys. A chart's a chart. You have your stop loss in, fine. But rather than having a price target, you have a time of day where you're going to reevaluate the trade. So you're going to say, right, I'm going to come back 5:15, or whatever time it was, and I'm going to reevaluate the trade. And I'm going to go through, let's get rid of that vertical line, let's use that kind of a vertical rectangle there. I'm going to go through an evaluation process. I'm going to say, okay, how was price action? This is when you're kind of looking at something purely from an independent, non-biased way, rather than the price target. Like, it's not hitting my price target, it's not this. You're looking at it and saying, okay, what's happened? Well, we pushed up off the low, we took out the high. Is that a triple top? We haven't pushed down much, we're trying again, we're holding at highs. You start to go through the dialogue in your mind about what's actually happening with price. You might go back on the time frames. You might go, oh, we're on the 15-minute chart, we're still at highs, we're looking pretty good, I don't need to panic about this, we've not kind of come back, maybe I use an indicator, we've not come back below the VWAP, whatever you use, or stochastics, whatever, it doesn't really matter. The point is, you're kind of going through your checklist and going, right, what's price telling me? Where are we in relation to highs? Where in relation to a key indicator? What have we done? Have we done this? Have we done that? Have we rejected a really big level? And you make an assessment. And your assessment is purely this. Do I close the trade, or do I wait until the next checkpoint, as it were? And the next checkpoint might well be, okay, I'm going to wait until 6:15 this time. Perhaps you extend that, perhaps you bring it forward if there's something important happening, like say, if trading the European session, US session's open at 2:30 UK time, and it's 2 o'clock, you might want to reevaluate just after the open, or you reevaluate at a point in time is often a turning point for the market. 6 o'clock UK time, very often a turning point, and happens to be there as well. Very often a turning point in the market. So you can also adjust it and tweak it, but the difference in this strategy is that Your risk's managed. You don't have to worry about the trade. The risk is going to be take care of itself. But this allows you to look at the trade in specific increments. So like I say, if you were day trading, maybe look at it an hour later and go, what's happening? Nothing much is happening. We're sitting at highs. Hour later, prices pull back to the VWAP. What do you think about that? Well, you're not happy about it because you're long. But at the same time, you might go, you know what? It's still holding. If it holds, if it comes back through the VWAP, maybe you adjust your stop. Maybe you do something. Maybe you tweak the stop loss position. Maybe you scale out of some. But the point is, guys, I mean, I can go on it forever and talk to do every hour. The point is that you're, rather than judging your trade based on whether it's hit your target, you're just freshly reevaluating the trade at a specific point in time. It's an hour, half an hour. If you're swing trading, it might be the end of the day. My swing trading, I like to look at it an hour after the US session's opened. If I've got some swing trades overnight, I like to look at it about the midday time, and I like to look at it just before the close. And then I'm going to make an assessment. I'm going to go, right, I'm happy with that. Happy to hold overnight, fine. Next day, happy, fine. Next day, oh, you know, bright action's not so good. We pull back a little bit. I might bring my stop up then, or I might decide to close some of the position. That stops you constantly looking at price, number one. It stops you referencing, as I say, where your price is relative to your target and getting frustrated if it's not being hit. And it allows you to get on a runner. You know, because if you're on a trade that's really running and it just hits your target straight away, that's fine and great, but you're not letting the trade mature into something that it could be. You know, if you had a trade here, for example, you're like, oh, my target's here, but in reality, you kind of check the trade an hour later, it's here and it's holding, it's flagging above the high. You might go, oh, all right, well, I'll pull my stop up and I'll give it a bit more room. And then an hour later, it's kind of a little bit further on, and you might decide to take it as a double top or whatever. But the point is, you get the opportunity to put some time between your decision-making process. Something to try out, guys, swing trader or day trader, rather than having price targets. I'm not saying it's right for everybody. I'm not saying this is a kind of just rip up your rule book, but just something to consider. Maybe you do it with a final trailer, like I often do with a final kind of trailing position. I might have some levels that I'm looking to take a trade off based on support, resistance, price, etc. I don't have an expectation of it to go through, but if it goes through, I've still got a portion on. Then I'll do the assessment at key intervals on day trading, you know, tighter intervals, swing trading, longer intervals, and it just gives you the opportunity to let price work for you for a change, rather than kind of constantly being frustrated or just getting taken out, and it carries on going and all this kind of stuff. So something to consider, something to look at. Hope that's helped, guys. Don't forget to link in that description below. Take care. Bye bye.